an ancient investing strategy that beats even Wall Street's best investors. Genesis 13 verse 2. And Abram was very rich in cattle, in silver, and in gold. If you are struggling to break through to the next financial level, perhaps a change in your investment strategy will take you from poor to rich or from rich to very rich. In Genesis 13 verse 2, there are 3 proven assets that will make you very rich. They are cattle, silver, and gold. The million-dollar question is, can investing in cattle, silver, and gold still make you very rich these days as in the days of our father Abraham? In the chapters that follow we will analyze if investing in cattle, silver, and gold like Father Abraham did still gives the best results or not. Cattle. Cattle fall in the category of biological assets named livestock. Can owning livestock make you really rich? Livestock refers to domesticated animals raised in agriculture for various purposes such as food, fiber, labor, and companionship. Common types of livestock include cattle, sheep, pigs, goats, poultry, chickens, ducks, turkeys, and more. Owning livestock can potentially lead to wealth, but it depends on various factors such as the scale of operations, market conditions, management practices, and the specific type of livestock. Here are some ways owning livestock can contribute to wealth. 1. Meat production. Raising livestock for meat can be profitable if there is a demand for the meat products and efficient production practices are implemented. 2. Dairy and egg production. Dairy cows, goats, and poultry, like chickens, can be sources of milk and eggs, which can be sold for profit. 3. Breeding and sales. Breeding quality livestock and selling them for breeding purposes or as show animals can be lucrative, especially for breeds in high demand. 4. Fiber production. Animals like sheep for wool and alpacas for fiber can provide materials that can be sold or used in textile production. 5. Manure and byproducts. Livestock waste can be used as fertilizer, and some byproducts like leather from cattle can be valuable. However, owning and managing livestock also comes with risks and challenges such as disease outbreaks, market fluctuations, weather-related issues, and high initial investment costs. Successful livestock ownership often requires good knowledge of animal husbandry, proper facilities, access to markets, and sound financial management. In summary, while owning livestock can potentially contribute to great wealth, it's important to research and plan carefully, considering both the opportunities and challenges involved. Are livestock farmers wealthier than crop farmers? The wealth of farmers, whether they primarily focus on livestock or crops, can vary widely depending on multiple factors. Here are some key points to consider. 1. Income potential. Livestock farming can often generate higher income per animal compared to crop farming, especially if the livestock are raised for meat, dairy, or breeding purposes. However, livestock farming also requires significant investments in infrastructure, feed, healthcare, and labor. 2. Market conditions. Market demand and prices for livestock products can fluctuate, impacting the profitability of livestock farming. Similarly, crop prices can also vary based on market conditions, weather, and global trends. 3. Land use efficiency. Crop farming generally requires more land compared to livestock farming. Therefore, crop farmers may need larger land holdings to achieve similar income levels as livestock farmers operating on smaller parcels of land. 4. Risk factors. Both livestock and crop farming involve risks such as disease outbreaks, weather-related losses, market fluctuations, and regulatory changes. Managing these risks effectively is crucial for financial success in either sector. 5. Diversification. Some farmers practice both crop and livestock farming as a form of diversification, which can help mitigate risks and enhance overall income stability. Ultimately, the wealth of farmers in either sector depends on their individual circumstances, management practices, access to resources such as capital, land, and technology, market knowledge, and ability to adapt to changing conditions. It's not accurate to generalize that livestock farmers are always richer than crop farmers or vice versa, as both sectors have their own advantages and challenges. Are cattle the most profitable animal among all livestock? Cattle can be among the most profitable livestock animals for several reasons, but profitability can vary based on various factors such as management practices, market conditions, and geographical location. Here are some reasons why cattle are often considered profitable. 1. Market demand. Beef is a highly consumed meat globally, leading to consistent demand for cattle. Additionally, there is demand for other products such as dairy from dairy cattle. 2. Value of byproducts. Cattle produce valuable byproducts such as hides for leather, bones for fertilizer and processing, and other materials that can be utilized for additional income streams. 3. Breeding and genetics. Breeding and selling quality breeding stock can be highly profitable, especially for specialized breeds or those with desirable traits such as high milk production, meat quality, or disease resistance. 4. Longevity and life cycle. Cattle have relatively long life cycles compared to some other livestock, allowing for continuous income generation over time through breeding, meat production, and other activities. 5. Land use efficiency. Cattle can utilize grazing land that may not be suitable for crop production, making them an efficient use of resources in certain environments. However, it's essential to note that profitability in cattle farming is influenced by factors such as feed costs, veterinary expenses, market prices for beef and dairy products, and weather conditions affecting forage availability. Effective management practices, including herd health management, nutrition, breeding strategies, and marketing, play a crucial role in maximizing profitability in cattle farming. Other livestock animals like pigs, poultry, and goats can also be profitable depending on market demand, input costs, and management practices. Therefore, while cattle can be profitable, the overall profitability of livestock farming depends on various factors and considerations specific to each operation. Silver. What are the purposes of silver and why is it such a valuable or precious metal, and can owning it make you very rich? Silver has several purposes and characteristics that contribute to its value as a precious metal. 1. Industrial uses. Silver is a highly conductive metal, making it valuable in various industrial applications such as electronics, solar panels, medical devices, and photography. Its reflective properties also make it useful in mirrors and reflective coatings. 2. Currency and investment. Throughout history, silver has been used as a form of currency and a store of value. It is still considered a precious metal investment, with many investors purchasing silver bars, coins, and bullion as a hedge against inflation and economic uncertainty. 3. Jewelry and silverware. Silver's luster and malleability make it a popular choice for jewelry, silverware, and decorative items. Its aesthetic appeal adds to its value in the luxury goods market. 4. Antimicrobial properties. Silver has antimicrobial properties which make it useful in medical applications such as wound dressings, catheters, and antibacterial coatings for medical devices. 5. Historical and cultural significance. Silver has a long history of use in various cultures for ornamental, ceremonial, and decorative purposes, adding to its cultural value. As for whether owning silver can make you very rich, it depends on various factors such as the quantity of silver owned, market conditions, timing of purchases and sales, and overall investment strategy. Like any investment, the value of silver can fluctuate based on supply and demand dynamics, economic conditions, geopolitical factors, and investor sentiment. While silver can potentially contribute to wealth accumulation and diversification in an investment portfolio, it's essential to approach investing in precious metals with careful research, risk management, and consideration of one's overall financial goals and risk tolerance. Diversification across asset classes is often recommended to reduce risk and enhance long-term financial stability. Gold. What are the purposes of gold and why is it such a valuable or precious metal, and can you become very rich by investing in it? Gold serves various purposes that contribute to its value as a precious metal. 1. Store of value. Gold is a traditional store of value and a hedge against inflation and economic uncertainty. Its scarcity and enduring value make it a sought-after asset for wealth preservation. 2. Currency and investment. Gold has been used as a form of currency throughout history and is still considered a monetary asset today. Many investors buy gold bars, coins, and bullion as a means of diversifying their investment portfolios and protecting against financial market fluctuations. 3. Jewelry and ornamental use. Gold's luster, durability, and malleability make it highly desirable for jewelry and decorative items. It is a symbol of wealth, luxury, and prestige in many cultures. 4. Industrial applications. Gold has several industrial applications, particularly in electronics, where it is used in circuitry, contacts, and components due to its excellent conductivity and resistance to corrosion. 5. Medical and dental uses. Gold is used in medical devices such as implants, dental crowns, and radiation shielding due to its biocompatibility, non-reactivity, and durability. 6. Cultural and religious significance. Gold has deep cultural and religious significance in many societies, often associated with wealth, royalty, and divine attributes. As for whether investing in gold can make you very rich, it depends on various factors such as the timing of your investment, market conditions, economic factors, and your investment strategy. Gold can be a valuable part of a diversified investment portfolio, providing stability and acting as a hedge against economic downturns or currency devaluation. However, like any investment, there are risks associated with investing in gold, including price volatility, storage costs, and liquidity issues. It's essential to conduct thorough research, consider your risk tolerance and investment goals, and diversify your portfolio across different asset classes for long-term financial success. While gold has historically preserved wealth and served as a safe haven asset, it's important to approach gold investing with caution and a long-term perspective rather than expecting immediate riches. God's take on becoming very rich. What does God actually say about cattle, silver and gold? Haggai 2 verse 8. The silver is mine, and the gold is mine, saith the Lord of hosts. Psalms 50 verse 10. For every beast of the forest is mine, and the cattle upon 1,000 hills. God owns all the cattle, silver, and gold. Therefore, if you make yourself a friend of God, you will get access to his cattle, silver, and gold plus a bonus of wild animals if you don't mind. Abraham was a friend of God, and therefore it is no surprise that he was rich in cattle, silver, and gold. James 2 verse 23. And the scripture was fulfilled which saith, Abraham believed God, and it was imputed unto him for righteousness, and he was called the friend of God. You become a friend of God when you believe God to do what he reveals to you. If you, therefore, find yourself not having riches, you might want to check if you have believed and acted upon everything God has revealed to you. The book of Isaiah teaches that if you are willing and obedient, you shall eat the good of the land. Isaiah 1 verse 19. If ye be willing and obedient, ye shall eat the good of the land. Be willing to be guided by God's counsel and obedient to his instructions, and also those from people in authority, and you will move from poor to rich and from rich to very rich. Father Abraham versus Warren Buffett and other investors. How will Father Abraham's investment strategy pit against strategies of modern-day stock exchange gurus such as that of top billionaire investor Warren Buffett? In 2023, Warren Buffett was the fourth richest person in the world according to Forbes magazine. He had a net worth of $121 billion. Of course, Father Abraham lived in an age where there was no stock exchange. We won't be able to determine his net worth. Let us assume, for our analysis, that Father Abraham miraculously reappeared from the dead 10 years ago, and continued investing in cattle, silver, and gold. How would his portfolio compare against someone that invested in the stock exchange at the same time? Since there are diverse investment strategies and many stock exchanges and stocks in the world to pick from, we will simplify our analysis by selecting the largest stock exchange in the world and an index fund that is large enough to be the best representation of all stocks on that stock exchange. For this comparison, we selected the US 500 index. Here is how that index would compare against Father Abraham's cattle, silver and gold portfolio over the last 10 years. Using data from the website www.dragongenomics.com and their indices for US 500, live cattle, silver, and gold, we got the following insights pertaining to the last decade. The US 500's price grew by 175% over the last decade. The cost price of a fully grown cattle grew by 35%. The price of silver grew by 25%. The price of gold grew by 10%. Warren Buffett's company Berkshire Hathaway grew by 215%. To illustrate, let us assume Father Abraham, a fund manager, and Warren Buffett all invested $1 billion 10 years ago. How much would they each be having by now? For this exercise's purpose, we will assume that Father Abraham split his investment into 3 equal parts among cattle, silver, and gold. Computations reveal that Father Abraham's $1 billion investments would have grown to $1.25 billion in the last decade. The fund manager's $1 billion investment in the US 500 index fund would have grown to $2.75 billion. Warren Buffett's $1 billion investment would have increased to $3.15 billion. From face value, it seems Father Abraham's investment portfolio of cattle, silver, and gold does not do so well in this information age. However, there is a significant factor we didn't take into consideration: cattle multiply. Assuming cattle give birth to a calf every 2 years, then in 10 years the herd would have grown 5 times if only bulls are born and 15 times if only cows are born. Percentage-wise, the above equates to 500% and 1,500% growth rate respectively. Without even taking into consideration the increase in price of cattle, but by simply looking at the compounding effect, Father Abraham's investment would have grown from $1 billion to $2.7 billion or $6.1 billion depending on the gender of the cattle born. If Father Abraham were to change the composition of his portfolio to have more of cattle than silver and gold, then his return on investment would be even more impressive. Investing into cattle has the financial advantage referred to as the compounding effect. In our example above, Father Abraham beat the index fund manager and Warren Buffett due to the compounding effect. Of course, our example had many assumptions, yet, all things being equal, investing in cattle is the best investment one can ever do. Conclusion. It is good to research and know the various investment vehicles that are out there. Until you take investing seriously, you will sweat all your life with little to show for it. You need investments that work for you whilst you sleep. Cattle grow whilst you sleep, and therefore they are a good asset to invest in. If you aim to be as rich as Father Abraham, then walk, live, and invest like he did. Thank you for watching this video to the end. Remember to like, comment, share, and subscribe if you would like to view more content. Until next time, make your ways prosperous and have good success.